turning to business now with the excellent Nicholas Poynton. Kia ora, Nicholas. I saw this pop up earlier today and I'm so curious to know more about it. Beg my pardon, we'll try that again. Sky City shares have been hit by an Australian money laundering probe. What is going on there?
Yeah, so shares in the casino operator Sky City Entertainment, they've fallen by more than 5% today after it revealed to the market that it was under investigation for possible breaches of anti-money laundering rules. And the Australian financial regulator, otherwise known as AUSTRAC, says it's looking into potential serious non-compliance with the laws at the company's Adelaide casino. Now, they were to do with potential breaches relating to necessary due diligence and the management of high-risk individuals. Now, these possible shortfalls, they were found during an assessment that was conducted by AUSTRAC back in 2019, and they relate to alleged breaches that occurred between 2015 and 2016, and also a 12-month period between 2018 and 2019. And surprise, surprise, Sky City would not speak to us about this announcement today. Instead, they released a statement in which it said that it takes its anti-money laundering responsibilities incredibly seriously and would cooperate fully with AUSTRAC's investigation. But I should stress that any breach of these rules, if they are found to have breached them, would result in some serious fines or even potential restrictions on its trading. And this investigation, it really is the latest move by the Australian regulator to really clamp down on anti-money laundering compliance, because earlier this year Sky City had announced that it had cut all ties with junket operators, and this is perhaps one of the more murkier areas of sort of the gaming and entertainment industry, because junket operators, these are agencies that go out and recruit high rollers into organised gambling trips. They fund their gambling and they collect whatever debts are owed. They also receive a commission from the casino based on the amount of gambling that these their customers, their clients actually do. Now, the company, they revealed, no reason as to why they made the decision back in April to cut ties with junket operators, but it did come after an Australian inquiry into a Sydney-based casino found that these operations posed a money laundering risk and had links to organised crime. And on the back of this announcement today, the market did not like it. Shares in the company were down 5.7%, or down 21 cents to $3.45 a share.
5.7%, that's significant. Thank you for that. Now, you've got some more information for us on credit. What's been happening in May?
Yeah, well, look, credit demand throughout the pandemic has been incredibly high, for the most part fueled by record low interest rates. Really peaked back in February. That was partly because mortgage lending was so high, because in March we saw the reimposition of tightened lending LVR restrictions from the RBNZ. Since February, though, since that record, it has come back down a bit. What we saw in May was levels consistent with what we saw in April, about up 41% on a year ago. That's largely because the whole credit market collapsed when the whole country went into alert level 4 lockdown. Now, the interest in credit from the buy now, pay later industry, that has softened somewhat over the month, but that's because we haven't seen many of the big retail events. Big retail events can be thought of as the big sales we see on Black Friday, for instance. But auto finance, that actually picked up, which indicates that there is still a high level of discretionary spending going on within pockets of the economy at the moment. The interesting question with that, though, is how sustainable that is, because we had a report on RNZ last week that the number of new cars coming to New Zealand has really dropped off. That's because of these supply chain disruptions, but also this global shortage of computer chips, which has seen manufacturers had to close down factories because they can't actually get the necessary parts they need to actually build the cars. So we may see that demand actually begin to tail off, not necessarily because people don't want to buy cars, but the cars they want to buy aren't actually on our shores. But mortgage lending, this was largely unchanged month on month. This is the big mover in terms of credit demand. Centrix, they had this measure which shows that mortgage lending or mortgage demand, that's demand for mortgage credit, was up 20 points on its baseline level in the month of May. But in February, it was 40 points above its baseline. So still strong, but maybe it's beginning to tail off slightly. The reason that they've suggested is for reasons that I've never quite really comprehended, which is people tend to sell fewer houses in the winter months. and it's likely to fluctuate over the coming months. Maybe as we see more and more houses come to market, we may see that lending begin to increase. I did ask Centrix about whether they thought that suite of government measures to sort of cool the housing market, whether they've had any effect, and they say it's just too early to say at this point. One other point that's worth mentioning in this report, though, is that the number of mortgages in hardship, that has risen over the month. That's partly due to the fallout of the mortgage deferral scheme coming to an end in March, and that's likely to increase. It could increase for quite some time, with the RBNZ signalling that it looks to looking to raise interest rates in the second half of next year.
And no doubt you will bring us more information on that. Just before you go, markets update if you don't mind.
The NZX is up 21 points to 12,518. The dollar's at 72.2 US cents and 93.2 Australian.
Hey, thank you so much. That is our business reporter Nicholas Poynton there.